Welcome to lecture number 32, the final lecture for this semester. In this lecture, we'll do a brief recap of um, the different types of ratios that can be used to analyze any financial report. We will look at the different methodologies that are adopted by companies all over the world to analyze the financial reports and to tell to the world at large where the company stands. Now, what is sustainable income? Ultimately, the value of a company is a function of its future cash flows. Future cash flows का मतलब ये है कि obviously when you're trying to analyze, so you always keep the फ्यूचर फैक्टर इन माइंड. तो आप देखते हैं कि जितना कंपनी में कैश का फ्लो है, कैश विच इज इनकमिंग and the cash which is going out, it tells us the true value of any company. Accrual based accounting may we know we not all sales are on cash, and not all expenses that we incur have been paid for. So we always have to keep in mind the future cash flows. When analysts use this year's net income to estimate future cash flows, they must make sure that this year's net income does not include irregular. What does irregular means? Out of the ordinary revenues, expenses, gains, or losses. Net income adjusted for irregular items is referred to as sustainable income. So, sustainable income is any income which does not include any irregular or any extraordinary item in it. Whether that extraordinary or irregular item leads to uh, uh, gain or loss is another discussion. Sustainable income is the most likely level of income to be obtained in the future. Sustainable income differs from actual net income by the amount of irregular revenues, expenses, gains, and losses included in this year's net income. Users are interested in sustainable income because it helps them derive an estimate of future earnings without the noise of irregular items. For example, suppose if there is a company by the name of Rai Corporation, it reports this year's net income of $500,000. लेकिन when you look at that figure closely, तो आप उसमें से देखते हैं कि $400,000 जो आपका था गेन, वो once in a lifetime gain था, which you do not expect in future. So we would likely ignore this 400,000 gain and estimate that next year's net income will be in the neighborhood of 100,000. So there was an irregular figure of 400,000, which when we were analyzing the report, we will subtract and then we will look at the net income expected in future. Therefore, identifying irregular items is important if you're going to use reported earnings to estimate a company's value. Now, what are the irregular items? To help determine sustainable income, we identify irregular items by type on the income statement. Their company report two types of irregular items. Normally, one is the discontinued operations, and the second one is called the extraordinary items. Irregular items are reported net of income taxes. That is, a company first calculates income tax expense for the income before irregular items. So, what is the general concept behind irregular items? Let the tax follow the income or loss. Now, what is discontinued operations? Discontinued operations refers to the disposal of a significant component of a business, such as the elimination of a major class of customers or an entire activity. When the disposal of a significant component occurs, the income statement should report the gain or loss from the discontinued operations net of tax. To illustrate, assume that Rosac Incorporated has revenues of 2.5 million and expenses of 1.7 million from continuing operations in 2014. The company has income before income taxes of 800,000. During 2014, the company discontinued and sold its unprofitable profitable chemical division. Now you see कि आपके जो chemical division है, it is becoming a discontinued operation. Why? Because it will not be happening in the next financial period. The loss on disposal of the chemical division net of tax 90,000 tax savings was 210,000. Illustration below shows income statement presentation assuming a 30% tax rate on income before income taxes. This presentation clearly indicates the separate effects of continuing operations and discontinued operations on net income. After income before income taxes is 800,000 and your income tax expense is 240,000. So the income before irregular items is $560,000. So जो आपका discontinued operations है, loss from disposal of chemical division, net of 90,000 income tax savings, वो आपका है 2,10,000. तो जो आपकी net income after taking care of the discontinued operation is $350,000. Extraordinary items. Extraordinary items are events and transactions that meet two conditions. They are unusual in nature and infrequent in occurrence. To be considered unusual, the item should be abnormal and only incidentally related to the customary activities of the entity. To be regarded as infrequent, the event or transaction should not be reasonably expected to recur in the foreseeable future. If you remember, we did this concept of extraordinary items before, but in this last lecture, I'll try to explain it to you clearly what it really means. Because whenever we are doing the financial statement and analysis, we taking care of the extraordinary and the discontinued operation is a necessity which should be done at all costs. Companies report extraordinary items net of taxes in a separate section of the income statement immediately below discontinued operations. To illustrate, assume that in 2014 a revolutionary foreign government expropriated property held as an investment by Rosac. If the loss is 70,000 before applicable income tax savings of 21,000, the income statement presentation will show a deduction of 49,000. So ये आपका already निकला हुआ था income before irregular taxes, if you remember 560,000 की, आपका discontinued operation 210,000 का था. Extraordinary items, आपकी net of investment है 49,000, so net income is 301,000. If a transaction or event meets one but not both of the criteria for an extraordinary item, a company should report it as a separate line item in the upper portion of the income statement rather than in the bottom portion as an extraordinary item. और which are these two? आपका इसमें एक तो है कि unusual और infrequent दोनों होने चाहिए. Now these are the examples of extraordinary items. जैसे आपके effects of major natural casualties होती हैं. If rare in the area, then आपकी takeover हो गया of a property by a foreign government. आपकी newly enacted law or regulation हो सकता है which can uh, hit you in a positive or in a negative way. फिर ordinary items आपके हो गए effects of major natural casualties, not uncommon in the area, so that will be an ordinary item. फिर आपकी write down of inventories or write off of receivables is an ordinary item, so it is all never treated as an extraordinary item. Changes in accounting principle. For ease of comparison, users of financial statements expect companies to prepare their statements on a basis consistent with the preceding period. A change in the accounting principle occurs when the principle used in the current year is different from the one used in the preceding year. An example is a change in inventory costing methods such as FIFO to average cost. Accounting rules permit a change when management can show that the new principle is preferable to the old principle. So obviously you have to adjust your previous records as well, which we did in the previous lectures. There are two ways. uh, Comparative analysis. As indicated in assessing the financial performance of a company, investors are interested in the core or sustainable earnings of a company. In addition, investors are interested in making comparison from period to period. Throughout this textbook, we have relied on three types of comparisons to improve the decision usefulness of financial information. One is the intra-company basis. Comparison within a company are often useful to detect changes in financial relationships and significant trends. For example, a comparison of Kellogg's current year's cash amount with the prior year's cash amount shows either an increase or a decrease. So this is the intra-company, means within the company. Then you have inter-company basis. Comparison with other companies provides insight into a company's competitive position. For example, investors can compare Kellogg's total sales for the year with the total sales of its competitors in the breakfast cereal area, such as General Mills. So this between different companies is called intercompany basis. Then you have industry averages. Comparison with industry averages provide information about a company's relative position within the industry. For example, financial statement readers can compare Kellogg's financial data with the average for its industry compiled by financial rating agencies जो आपकी मुख्तलिफ होती है. We use three basic tools in financial statement analysis to highlight the significance of financial statement data. One is the horizontal analysis, then vertical, and the third one is ratio analysis. What is horizontal analysis? It is also known as trend analysis, if you remember. It is a technique for evaluating a series of financial statement data over a period of time. Its purpose is to determine the increase or decrease that has taken place, expressed either as an amount or a percentage. For example, here are recent net sales figures of Chicago Cereal Company. अब आप देखेंगे कि इसके different years के इन्होंने figures दिए हुए हैं. If we assume that 2007 is the base year, we can measure all percentage increases or decreases relative to this base period using this formula. So this is called the horizontal analysis when you compare figures for different years. Then we have vertical analysis. Vertical analysis is also called common size analysis. It is a technique for evaluating financial statement data that expresses each item in a financial statement as a percentage of a base amount. For example, on a balance sheet, we might express current assets as 22% of total assets, or on income statement, we might express selling expenses as 16% of net sales. So what we are doing, we compare it for the vertical is for 1 year you take one figure as the base and then you compare it with the other figures, so that is called financial that is called vertical analysis. Presented below are the comparative balance sheets of Chicago for 11 and 10 analyzed vertically. The base for the asset items is total assets. अब आप देखेंगे जो बेस है वो आपका total assets is the base, and the base for the liability and stockholders equity items is total liabilities and stockholders equity. So जो आपका assets में है वो आपका total assets is the base, और इसमें आपका total liabilities and stockholders equity is the base. So when you look at the figure for 2011, you can say that जो आपके current assets हैं वो आपके 23.8% हैं of total assets. So this is how you do the vertical analysis. In addition to showing the relative size of each category on the balance sheet, vertical analysis can show the percentage change in the individual asset, liability, and stockholders' equity item. Vertical analysis also enables you to compare companies of different sizes. For example, one of Chicago cereal's competitors is General Mills. General Mills sales are 1,000 times larger than those of Chicago cereal. Vertical analysis enables us to meaningfully compare the condensed income statement. अच्छा, अब what you're doing, there is a difference in the size. And one company is 100 times bigger than the other. But using the vertical analysis, we can do a financial critical analysis of both the companies. अब देखें, this is the data for Chicago cereal. Then you have the data for General Mills. Although Chicago cereal's net sales are much less than those of General Mills, vertical analysis eliminates the impact of this size difference for our analysis. Chicago cereal has a higher gross profit percentage of 44%. इसका मतलब है कि when we are taking net sales as the base figure 100% है, so we see कि जो शिकागो सीरियल है उसमें ग्रॉस प्रॉफिट इज 44% of the net sales, while in General Mills it is 40%. Then again we can see income before operations जो हैं वो General Mills की 18.6% है, while for Chicago it is 15.9%. So that is how you do the vertical analysis even when there's a difference in the size of the companies. Looking at net income, we see that General Mills percentage is higher. Chicago Cedar's net income as a percentage of net sales is 9.4 compared to 12.1 for General Mill. So this is how you compare different companies using the vertical analysis. Now we come to the ratios. Ratios may we have done different ratios. हमने short term, long term debt paying ability, profitability, liquidity. We did all the ratios. Now we'll do a quick recap of what we have done in this syllabus. Liquidity ratios measure the short-term ability of the company to pay its maturing obligations and to meet unexpected needs for cash. Short-term creditors such as bankers and suppliers are particularly interested in assessing liquidity. Liquidity ratios में working capital है, current assets minus current liabilities, then current ratio है, current assets over current liabilities. So these are the uh, ratios which are very important when you talk about liquidity ratios, and make sure that you follow the other notes as well that I gave you when we were doing the liquidity ratios. Then we have solvency ratios. Solvency ratios measure the ability of the company to survive over a long period of time. Long-term creditors and stockholders are interested in a company's long-run solvency, particularly its ability to pay interest as it comes due and to repay the balance of debt at its maturity. So solvency ratios जो है ये basically it deals with the long-term debt paying ability. उसमें you have the debt to assets ratio, then you have cash debt coverage, then you have times interest earned. Then we come to the profitability ratios. Profitability ratios measure the income or operating success of a company for a given period of time. A company's income or lack of it affects its ability to obtain debt and equity financing. So profitability ratios may we have earnings per share, we have price earnings ratio, gross profit rate, profit margin, return on assets. So all these. So this is the end of lecture number 32.